Lately, you may be wondering, what should you do with the ongoing US-Israel-Iran conflict, and the economy seems like it's struggling and the stock market is up and down? That's what we'll cover today on the Investing Mastermind Podcast. I'm Marki.
And I'm Signe Lonholdt.
And there are no clear answers because none of us have a crystal ball, but there are some techniques that you can do. And since we're Warren Buffett style investors, of course, the moral of the story is always going to be invest in quality businesses at a good price. So that's kind of what I did when stocks were headed for some of their recent lows in March. I was looking for a few quality businesses that I put a little bit of money in, but I didn't invest like all of my money in that because you never know if things are going to get worse. I didn't want to put all my eggs in all the baskets yet. So I just conservatively bought the dip, as the kids like to say. That's kind of a trendy thing going on these days ever since the advent of meme stocks in the early 2020s. And now, buying the dip has become kind of what people just do since we haven't gotten much of a proper crash or recession. But some of the things going on in the US economy could potentially amount to a recession or even a depression, who knows, happening. And there are some areas that people are on the watch for, including what's the AI industry been up to? Like we heard about the recent discontinuing of Sora from OpenAI. So that must have been a setback. Or also in oil. Oil prices have obviously been on the rise. So if you own a gas guzzling car, you're probably feeling a bit of that economic pinch. And then also there's some weaknesses in the areas of both private credit, which has to do with debt, and then also private equity, which has to do with people owning private businesses. And typically most retail investors like you and I may be owning some private equity in the form of funds. So some of these funds have also been risky lately. So these are among the various topics that Signe and I will cover, some in greater detail, some in less, but we figured we'd just talk through the state of things now around springtime 2026. So what do you think, Signe, about what's happening now?
Oh my goodness. Well, there's so many things happening these days. And if you're listening to the podcast, in the future and not on the day it's released, that's the thing about podcasts. This is kind of the time where there's a lot of uncertainty in the world. Congratulations, Michelle, on buying the dip. And I also want to say that you buying the dip is a little bit different than when everybody else buys the dip, because I think everybody else buys the dip because they think it's a dip, but it's not. And then it dips more and more and more. So congratulations to you for, having this strategy and actually knowing when was a good time to buy quality at a discount. So just wanted to also mention that. So with what is going on in the world right now, so gasoline prices are increasing, which means that all goods and services, the prices will increase because the farmers need gasoline for the tractors. So now it's springtime in the northern hemisphere of the world, and they need to start seeding and, also to get your Amazon groceries or whatever you're getting, get that from A to B, that's gas. So everything is going to be more expensive because of when gas prices are, increasing, then everything else is increasing. And maybe we can dive into that also even more a little bit later. But that means that you are going to feel it not only when you go to the gas station, but also when you go to the grocery store. And that is 100% going to have consequences for private people, for companies, and investing in private equity, as you also talked about, Michelle, is that, a person on Main Street, to mention an expression that's used by a big, very influential person within the space of private equity, when someone from Main Street, a normal person, what they can do is invest in private companies. And if they don't know what to look for, when a private person buys a business, you want to make sure it's a quality business and not a business that's got a lot of debt, or, it's just not a sustainable business. And that's just where private people, when they look into that, they might not know what to look for, even though they, are being talked into going into private equity. And sometimes it's through companies and that invest big time in private equity, so that you can kind of buy, like you also mentioned, a part of multiple private equity acquisitions. So when that, and the reason why I'm mentioning this is that we're going to see some companies that aren't, going to be able to pay for gas, and maybe have loans that they aren't going to be able to pay. And what happens then is that they have to fold. And maybe this time private equity is not going to come in and infuse a lot of money into a business like that, because there is not necessarily a whole lot of money. So, it's all cause and effect, and, where you just see the ripples out in society. And is AI going to help? I mean, I know AI is a huge growth area, and that's what's, potentially is going to evolve. But what, I think Warren Buffett said it so well one time, that the internet is not going to change how you chew gum, and AI is not going to change how you get food on the table either. So that's my 2 cents about this.
Yeah, those are great points. And so it's interesting how the way that journalists are seeming to write about some things is like, what happens to AI and the oil industry and private credit could affect where the economy is headed this year. But you also have to stop and think, how much is AI really changing our lives? Like, maybe if you're in the more creative industries, like I think I saw a graphic recently from the Wall Street Journal that a lot of Hollywood jobs are at risk because of AI. So like in the more creative space, I could see AI directly impacting that economy in a significant way, because people can create so many videos out of AI and they look so realistic that, you would not imagine that it was done with a cheap person's access to the language learning model, because people have access to cheap language learning models. So, yeah.
Yeah, and that is such a great point, because that's actually another thing that you're so right about is, oh yeah, AI is going to impact. There will be people out there that are 100%, I'm so sorry to share the bad news here, it's going to be laid off because of AI is now overtaking jobs, also within, they're talking about coding jobs, where computer coders, you can get that code from AI. So there's actually, if you are in a position, and that's also what I want to say, if you're in a position where you're thinking, oh my goodness, could AI take over my job, accounting as well, where AI could just as well read all the law within accounting and then make your taxes for you in the future. So if you're in one of those areas where you think, oh my goodness, could AI take over my job? Then, and if you're not generating an additional income, like for example, investing with a very, very good system where you get that solid, kind of sum of money that's working for you, I think that's super dangerous where you are right now, because you want to make sure that you are ready for whatever future and that your money is starting to work for you, but doing it in a like really clever way. Don't just like jump into the stock market and then cross your fingers and pray and hope everything is going to be good. But I'm just saying, to your point, Michelle, that how come AI is going to save the economy when we're actually kind of seeing the opposite, that people are now without a job, and would their money come from? Because now they don't get employed because of AI, right? So it's just like, think about, is AI really going to help you?
Yeah, I mean, I think the main moral of the story there is that we have to adapt. If we work in industries that are under threat by AI, we're going to have to learn to adapt. Otherwise, we could be at risk of losing our job. So The other good thing, prudent thing to do is make sure your resumes are updated and you're in a practice of interviewing and being able to sell yourself if you need to find a new job or change careers. That could be a possible outcome of some of this. But yeah, it's interesting how, Wall Street Journal just reflects upon that. And with the oil industry, we all know that's a pain right now because a lot of oil goes through the Strait of Hormuz, which is now basically a toll booth that is under control of Iran. And from the US side, we're trying to get it open again so that commerce and oil can flow through, because that's going to be a bottleneck to the world economy. So it's not a good place to be right now. And I don't have many answers in terms of what's going to happen with oil. But the one thing is, if you're an investor like Warren Buffett and you like oil and you invest in some of those companies like Occidental Petroleum, you probably could be up on your stocks right now because that's something that you studied and you're into. So maybe you're doing just dandy if you are an oil investor and now oil went up because the price of oil per barrel is over $100. So if for some people out there, you could be doing well, but for other people out there, a lot of people who are commuting to work, and with the springtime, there's a lot more activity now, like leaving your home. So at least the one good thing is hopefully energy prices for heating up your home will go down a little bit since it's getting warmer. But on the flip side, you're paying more if you have a gas car. So some people are being tempted to buy electric vehicles as a result. But you have to think about long term. What are the pros and cons of owning each type of vehicle? Like, are you better off long term with an EV, or are you better off sticking with your gas car and eventually gas prices will stabilize again?
Yeah, exactly. But what happens again with gas prices, what we can see in Europe also, just to talk about what's happening in Europe, like I saw an article from Ireland where there's gas stations that are, running out of fuel. So they, whenever you need your gas, then too bad, you have to go somewhere else. And it's like, oh, but I really need a gas right now. So in Ireland, some gas stations simply have to close because they don't have any gas to sell. And in Denmark, where I'm from, the inflation has already started increasing. So it's, now starting, just like I mentioned just earlier, where there's increase in prices is clothing, stays at hotels. So it's, now starting to increase inflation, and inflation had dropped in Europe. So inflation had significantly dropped after, the last energy crisis in 2022 with the war in Ukraine and the whole ordeal with energy prices because of, the gas line getting cut. At that time, there was, an energy crisis, especially in Europe, and inflation was increasing, and it had actually dropped since 2022 and dropped down to a okay place, and now they're increasing again because of this new energy crisis. So I don't know how that's going to fly in the US because of the relationship between the current president and the current chairman of the Federal Reserve. There's kind of a cold there between the two, but the Federal Reserve might also see an increase in inflation since gas prices are.
Oh yeah, and you're right that did happen. Inflation went up in March, so we can see that that's a concern. So we know the administration wants to lower the Fed funds interest rate, and that would be good for the stock market. A lot of investors would like that. But then on the flip side, that could be bad for the US economy. And if you go to a certain extreme when you're not supposed to, the US economy could go right into a recession if the people who are in leadership positions aren't careful. So it's a kind of weird tug of war. Like the Federal Reserve, if they see inflation going up, which it kind of is because of oil, then they're going to want to increase interest rates. But we know the administration wants to cut interest rates. So we'll see who's going to win out on that. But unfortunately for Jerome Powell, he's going to be on his way out, I think, after May. So it's going to be an interesting summer. So let's see what kind of shakes out there. That's going to be either good or bad for either the US economy or the stock market. We don't know, but you have to be prepared in case of potential different scenarios. And who knows, there could be good and bad, even if some areas are affected. Like if you have a mortgage and interest rates go down, then you can refinance, and then that's better for you. But interest rates going down when it's not the right time for them to go down could be disastrous for the US economy. So what do you think, Signe?
Well, so one question I want to ask you, Michelle, is was there something you would invest in right now and something you would not invest in? Because I think a lot of people are like, okay, so if we're going into a recession, is it a good time to invest? My question to you is actually, would there be sectors or something that you would stay away from, or how would you approach what we're seeing right now?
I mean, I don't think I would necessarily stay away from anything in particular with a potential recession. If anything, people should get excited if we get a recession, because that could mean wonderful businesses could be going on sale if people get scared and then they sell stocks. Like even Berkshire Hathaway was going down in price a little bit, like below 500. And that could have been a potential opportunity to buy a great business like Berkshire Hathaway. So you should not be scared and keep doing your homework of studying wonderful companies, because if the stock price goes to what you have calculated as a good margin of safety price, then you should act and buy stocks. So when everything looks like it's going bad, there could be tremendous investing opportunity. So you have to keep your eye on the ball in that regard and do what Signe and I have talked about in the past. Like learn about businesses that you care about, that you think are interesting, and evaluate how they're going to do in a potential economic storm, and then see if there's a good buying price, and see like if what's happening in the world economy, is that going to kill your business that you're interested in, or is it just a current obstacle, and then the business will be stronger afterwards. So those are some of the things I would think about.
Well, for me, I would probably, even though it's a wonderful business, but within retail, I would be very cautious. Retail, publicly traded retail businesses, unless it's like something that people absolutely need. But the issue about retail is that it is kind of fragile and cyclical, so that in case the economy goes into a really bad recession, there might be certain things that people would hold off buying, and we could potentially see retail stores struggling quite a lot. So even though today that it's a quality retail type business, and which means, retail is a fancy word for a store that you can, go down. And there are, of course, some things that people are always going to need, maybe something like building materials or something like that. But there's also things that people don't necessarily need, which are like certain fashion objects or stuff like that, where it could be more fragile and we really need to watch out. So that's just, where I would not necessarily look too much into retail, even though it is, let's say it's a wonderful business and doing really well and even have gone through many difficult times. I would probably wait until I would see the economy going better before I would want to invest in something like that. That's just what I am a little cautious about.
Mm-hmm. Yeah, that's a good tip.
Yeah. And then there are certain sectors which I'm not mentioning because I would never, ever, ever, ever invest in that, because there's simply just not any wonderful businesses in those areas. So those are given. If there's certain areas where there's like no gold to be found, of course I would, but I would never invest there anyways. Mm-hmm. So
yeah. Yeah, so it's a good time to get to know yourself as an investor. And the good thing about Warren Buffett principles is they apply no matter what state of the economy we're in, or no matter what's happening in the world. Yeah. If you invest like Warren Buffett, you're bound to be successful. So, yeah. And it'll also be a telltale sign if Berkshire Hathaway were to invest over $300 billion that they're sitting on, let's see if they take action at some point.
Yeah, that would be super exciting. And also, since we're talking about, and you're not diving into Warren Buffett's strategy. So if you're a new listener that found us on YouTube or on Spotify or somewhere, and it's the first episode, then go back and listen to some of the first episodes, because that's where you find kind of the foundation of the strategy. And we talk a lot about that. So don't get discouraged that we're talking about his strategy. We have so many episodes that you can go back and listen to where we dive so deep into his strategy. So this is just talking about right now, right here, what is going on in the economy. That's it for now. We'll be back in 2 weeks.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.